In this grade 12 accounting video, we are going to be looking at the March test scope, and we are going to also look at the layout of your question paper, meaning when you receive your question paper, what is it going to look like, considering you're not going to have the paper 1 and paper 2 that you traditionally have when you're writing your examinations. This is a common test in March, so how is it going to look like, and what has made this video particularly long, and what you can look forward to in this video is the 2024 March test paper. So we are going to be going through a 2024 March test paper to show you exactly what it is that you can expect from your question paper. So let's start with your scope, meaning your term 1 scope. What are the topics that you can expect that your question paper for this March is going to cover? You can expect your question paper to have GAP principles. Usually this topic usually includes also things like King Code. So if you have covered King Code, depending on how your school would have set the question paper, it may include that principle that you get. It's usually at the beginning of your test books. So the GAP principles, the King Code, and all the other informations about shares and how all of those work. So you can expect that. I would say prioritize knowing your GAP principles. Know what each principle is and what it does in the accounting preparation of books, and what does it mean when you are applying your IFRS. And then we are also going to look at the statement of comprehensive income. It is possible that your question paper will come with a statement of comprehensive income. If not a statement of comprehensive income, it would come with a statement of financial position, if not both of them. So this is the topic of financial statements, and usually these two statements, either you have one or the other, or in some question papers you will find that you have both. So you have to get comfortable in doing your statement of comprehensive income as well as your statement of financial position. In this channel, we have done enough videos on the statement of financial position, the statement of comprehensive income, as well as a question paper that had the information that mixed both these statements, meaning the transaction for both were mixed into one information, and you had to know how to differentiate it and what goes where and how do you do that. As well as fourth, you will have notes to financial statement. Usually you can't have a statement of financial position without having the notes that go with it, the notes that go with your financial statement. And then those notes, they usually also sip into the question that has to do with statement of cash flows. When you're doing statement of cash flows, it's very common that they will start with some notes, either a retained income or an ordinary share note, because usually the information in retained income note and an ordinary share note is very useful when you are doing a statement of cash flows. So either your notes will be going together with your statement of comprehensive income and the statement of financial position, or they will be in the question of statement of cash flows, if not in both of them. So you will see in the question paper that we did that we actually saw a question, the questions that we have in the question of financial statements, it also had the notes for that one, and when we moved on to the statement of cash flows, they also still had some notes to financial statements. So I'm saying this to say to you that there is no way for you to escape your notes. Now, what are the most important notes for you to study? Make sure that you are comfortable with your note to the retained income note. Make sure that you are comfortable with that one. The ordinary share capital note, make sure that you are comfortable with that one, as well as when it comes to note 3, meaning the notes or the fixed asset note, usually you have to just be comfortable with your depreciation, because sometimes when they give you a question on depreciation, they then don't see a need to give you a whole note, because a question on depreciation will cover things like your carrying value, they will cover things like the depreciation for the year, accumulated depreciation, and that is all of a lot of information that goes into the the note to fixed assets. So when you are able to cover those things, you would have in a way covered the information that just goes in the statement or in the fixed asset note. But for retained income, ordinary share capital note, make sure that you are comfortable with those. And if you have time to go further, then try and do the fixed asset note. Then in the topic of statement of cash flows, it also goes with financial indicators. Your financial indicators, we are talking about your ratios. So you have to know your ratio formula. You have to be able to be comfortable with using your formula in talking about the financial statements of a business. You will also notice that when you're doing the statement of financial position, there are some ratios that are needed in there for you to be able to complete the statement to financial position. So that topic of financial indicators doesn't stop just at the question that has to do with financial indicators. Lastly, you have the topic of interpretation of financial statements. Now this is where they calculate the ratios for you, and they just need you to talk about them, and they also give you some information in your financial statements, and all you have to do is comment on it. It is to give you opinions and whatnot on it. So let's look at the test layout, meaning when you open that question paper, what are you going to find? Most likely in your common test format, you are going to find only 3 questions. The first question, meaning question 1, will be a question on financial statement. And like we said, on financial statement, you can either get statement of comprehensive income or the statement of financial position as well as the notes, or you can get all 3 depending on how long your question paper is. So you can get all 3 of these things be in the same topic, meaning you can get the statement of comprehensive income as well as the statement of financial position and 1 or 2 notes that go with the information on both of those statements. So you can really expect anything. My recommendation is that you study both hard, because if you get both of the statements, then you will be covered. But if you only get one of them, at least you will know that you're putting your efforts into one statement, which is the statement of comprehensive income or the statement of financial position. Now, when we get to do the question paper on last year's March test, you will see that they only had one statement, and it was the statement of financial position. So we are still going to do that in this video, but you also have enough videos on this channel on the statement of comprehensive income and the statement of financial position, as well as, again, like I said, the video that includes both of the statement with the same information. So you can once you are done with this video, you would have covered the statement of financial position. Then you can go look for a statement of comprehensive income, or you can look for that one that has both the statement of comprehensive income and financial position all in one go. Just make sure that you cover those statements, because they're going to be in question 1. And by the way, this question 1 will most likely be the one that has the most marks. So if you mess up here, that can jeopardize your final mark for your March test. Then in question 2, what you can expect is the statement of cash flow as well as the financial indicators. More than likely, in the statement of cash flows, they will ask you to prepare some sections of the statement of cash flows. But remember, like I said, with the statement of cash flows, usually there are notes to financial statements that help you with the information that goes to your statement of cash flows. You will also see when we are doing a question in this very video. And then the last question, question 3, will be the interpretation of financial statements, which will also look at the indicators that you would have seen in question 2. Whereas in question 2 you were calculating them, in question 3 you will just be only commenting on them without having to do much of the calculations. So let's now get to this question paper that we've been talking about for so long. Starting with question 1, we know that question 1 is on financial statements. You see it says question 1, company financial statements. It's 45 marks usually. Like I said, it's going to be the one that carries the most amount of marks. It has only 2 questions. It has 1.1, which wants you to prepare a retained income note. So this is the note to the financial statement. We only want one note. It is the retained income note. And then in 1.2 they say prepare the statement of financial position for the year ended 29 February 2024 for 35 marks. And then it says note show working, certain figures are provided in the answer book. So we are now looking at a written income note and only one financial statement, which is the statement of financial position. So let's start with our retained income note, starting with its framework. So in the framework of a retained income note, you see that you start with a balance at the beginning of the year, or a balance on, meaning that you have to enter the date at the beginning of the year. They said that our year ends on 29 February 2024, so that can only mean that it began on the 1st of March 2023. So hence I've put that date there. The next line item you will enter is the net profit after tax, emphasis on after tax. Make sure it's after tax, because you get net profit before tax and the one after tax. And then the next line item will be a repurchase shares. You see that repurchase share, they did not enter for me. I had to enter it for myself. So what you can expect is, in your answer book, some of the line items will be missing, and you have to know the framework for you to be able to fill in what is missing. Then next we have the ordinary share dividend. The ordinary share dividend, that amount is a total. What makes up ordinary share dividend? It is the interim dividend and the final dividend, which I had to enter for myself. Interim dividend is the dividend that we pay during the year, and the final dividend is the dividend that we declare at the end of the year. Both of those amounts, when you add them together, they are going to give you your ordinary share dividend. I hope that is clear enough. Again, you see that the interim and the final, I had to enter them for myself. So it goes to that part of how well do you know your framework for you to be able to enter the line items that are not entered for you. Then the last line item will be the balance at the end of the year. Our year ends on 29 February 2024. So let's go to our information and look for at least the balance at the beginning of the year. So I am looking at my information here. I'm seeing a list of balances before taking into account the adjustment. It says 2022 and 2023, so I'm assuming that is an error with the question paper. It was supposed to say 2023 and 2024. The one on the previous year where it's a question mark, that would have been my balance at the beginning of the year, but it's a question mark. And then I have the 2,500,000, which I would assume is my balance at the end of the year, but it's not. Why? Because there it says 8 February instead of 29 February. So that means I need to go down to my information to see why does the date say 8 February instead of 29 February. Because if it doesn't say 29 February, it means I cannot put that one as my balance at the end, because it's really not. It was on the 8th of February. So I go to information B to find out what was happening on the 8th of February. So on the 8th of February 2024, it says 50,000 shares were repurchased at R1.50 above the average share price. This transaction was properly recorded, meaning that 2,500,000 already excludes or subtracts these 50,000 shares. Why? Because we know that when you are doing a ordinary share capital note, share buybacks are always subtracted. So that means we already subtracted this amount in that 2,500,000. So what I need to do is to add it back for me to be able to get the balance on 1 March, because that whole transaction happened on the 8th of February. So if I want the balance on 1 March, that would be the date before they bought back those shares. So I need to add back the 50,000 shares, but I need to add them at their value. So that's why you are seeing in my calculations, I said 50,000 multiplied by the R1.50 that they said I bought them for. It gives me 75,000. So there in bracket on 1 March 2023, I take that balance of 2,500,000, I add back the 75,000 I just calculated, and it gives me my balance at the beginning of the year of 2,575,000. Please replay that until it sinks in for you. Meanwhile, we move on to the net profit after income tax. We are looking at information and it tells me that SARS income tax for the previous year indicates a credit balance of 80,000. Tax paid for 2024 is 628, and income tax for the year amounted to 648,000. None of that tells me what is my income tax before tax or even after tax, so that I can at least use those amounts. So what I'm going to do is to use the formula for earnings per share. Now you see earnings per share right there at the bottom. It says earns per share of 120 cents. The formula says net profit after tax over a number of issued shares multiplied by 100. So I can manipulate that formula for me to be able to find my net profit after tax. So for me to be able to do so, I need the number of shares at the end of the year. It was on the 29th of February 2024. You see them there. It says it's 1,800,000 shares. So these 1,800,000 shares together with the 120 cents of earnings per share can help me get my net profit before tax, because if I reverse calculate that formula, I can be able to get that. So look at what I did. I took the number of shares, which is 1,800,000, and I multiplied it with 120 cents of earnings per share, and I divided that amount by 100. That is going to give me the net profit after tax, because net profit after tax is in that formula. Basically, I rearranged the formula to give me my net profit after tax of 2,160,000. Then we move on to the shares that I repurchased. Remember, it was on the 8th of February 2024. They told me that there was 50,000 shares that were repurchased at 150 above the average share price. This transaction was properly recorded. So what I'm going to do there is to record this amount of, remember we calculated it was 75,000 when we were doing our balance at the beginning of the year. So it's similarly the same calculation, 50,000 multiplied by 101 rand 50, and it's going to give me 75,000. It's going to be in bracket because it's a repurchase share. That's why at the beginning of the year we had to add it back, because what you do with the repurchase share is you always subtract it. That is because it's an expense. Then we move on to our ordinary shares, which start with interim. We need interim and final, but let's start with our interim dividend that we paid. It says in information B, on 1 September 2023, interim dividends of 40 cents per share were paid. Now, when it comes to paying of dividends, the number of shares that you are going to use to calculate the 40 cents off depends on the date. So we have to know what had happened on the 1st of September 2023. That means the 50,000 buyback of shares had not happened yet, because that comes after. According to our timeline, that happened on the 8th of February, whereas our interim, we paid it on the 1st of September 2023. So that was before we bought back the shares. So that means those shares in that date on the 1st of September 2023, they were still with our shareholders. So that means we have to pay a dividend on them. So that means that 50,000, we have to add it back to the number of shares that were still in issue at that time, and then we're now going to calculate the 40 cents of that amount. So we know that we have 1,800,000 shares, but that is after we had bought back the 50,000. So that means to get the amount before we bought back, we need to add back 50,000 to the 1,800,000 shares. That's how I got that 1,850,000. It's the 1.8 million at the end of the year plus the 50,000 of the shares that were bought back. But in September, they were not bought back yet. Then we multiply it with 40 cents and it gives me 740,000 as my interim. Then final. When it comes to final, it says on the 29th of February, a final dividend of 60 cents per share was declared to all shares to the register on 29 February 2024. On this date, the buyback had already happened. So that means we only are going to issue 60 cents on 1,800,000 shares that we have at the end of the year. I hope it's making sense. For interim, we had not bought back, so that's why we had to add back the 50,000 to the 1.8. but on the 29th of February we had bought back because the buyback happened on the 8th of February. Now it's the 29th of February, so we are going to calculate 60 cents on only 1.8. So as you are seeing there, it's 1,800,000 or 1.8 million, and we are going to multiply it with 60 cents, and it gives me a final dividend of 1,080,000. Those two amounts, my interim and my final, are going to give me what I call my ordinary share dividend. What I have to do is to simply add them. Add 740,000 plus 1,080,000, and it's going to give me 1,820,000 in bracket. Why in bracket? Because it's a dividend. I am paying it. I did not put the interim and the final in bracket because they are in a box, but their total, I'm going to put it in a bracket to show that that is the final expense that I have to spend on my dividends. Then calculating my balance on 29 February, it gives me 2,840,000. How did I get it? I took balance at the beginning of the year, 2,575,000, plus it with net profit after tax of 2,160,000, minus repurchase shares of 75,000, and minus ordinary share dividend of 1,820,000, and it's going to give me that 2,840,000. Notice I did not do anything in this calculation about the 740 and the 1,080,000. Why? Because they are already part of my ordinary share dividend. Don't do double accounting. We are done with our retained income note. We move on to 1.2. It says prepare the statement of financial position for the year ended 29 February 2024. You see it's for 35 marks. Like I said, it's going to be the calculation that is going to worth the most amount of marks, so make sure that you are comfortable with it. Make sure also you're comfortable with your framework for your statement of financial position. We know that it starts with assets. Under assets, I have non-current assets. They have given me 2 blank spaces there. It is my responsibility to know what goes in there. What goes in there, the first one is my fixed asset, and the second one is my financial asset or my fixed deposit, and that's what I'm going to go into my information to look for, because that's what's going to make up my non-current asset, my fixed assets as well as my fixed deposit. So when you see my fixed assets is a question mark, so I will come back to it, but I see that they have given me a fixed deposit of 1,200,000. So that's what I'm going to go into my answer book and enter, because it's been given to me. What I'm going to do with my fixed asset, I'm going to use it somewhat as a balancing figure, unless they have given me some information. But according to these information they gave me, there wasn't any information pertaining fixed asset. That's why I was going to use it as a balancing figure. So you see, I have entered my line item fixed asset. It's still blank because I'm going to use it as a balancing figure, but my fixed deposit, I have now put in my 1,200,000. Then I move on to my current assets. I have inventory, trade and other receivables, as well as cash and cash equivalent. Let me go to my information and look for those 3 items. So I get to my trading stock, that's my inventory. You see it's a question mark, so that means the way I did with my fixed asset, I will circle back to it. Then I go to my trade and other pay receivables. So in my trade and other receivables, I have net trade debtors of 950,000. How do you get net trade debtors? You take your creditors control and you minus your provision for bad debts. So let's go look at my information and see what they say in information F about my provision for bad debts. They say provision for bad debts must be decreased by 7,000. Means this 7,000 needs to be added back, because net trade bad debtors had already subtracted provision for bad debts. So we are reducing the amount we had already subtracted. How do you reduce an amount you already subtracted? You add back. Then information G as well, it says the debtors with a credit balance of 9,000 must be transferred to creditors ledger. A credit balance means in the debtors control we would have minused. So if we are transferring it, that means we have to now plus it. This will help cancel that credit side effect, meaning we are trying to make it zero in the debtors control because we'll deal with it in creditors control. Then we also have information E on director's fee. It says director's fees paid for the year amounted to 1,665,000. The company has 3 directors who received the same fee. The first director received her full fee of the current year. The second one did not receive his fees for February, and the third one requested to be paid his fees for March and April. The first one received a full 12 months, the second one only received 11 months, and the fourth one received 14 months, which gives me 37 months. So when I'm looking for a monthly fee, I'm going to take my total fee of 1,665,000 divided by 37, and it gives me 45,000 rand per month. Then I multiply it by 2 to get that 90,000. What is that 90,000? It is amount that I paid in advance. Then going to my answer book, I start with my net trade debtors of 950,000 I got from my list of balances. I add back the provision for bad debts that they said I needed to decrease. Then I also add the 9,000 that I said I need to take it to my creditors control. Then I also add back my 90,000 that I paid in advance to my third director. It gives me trade and other receivables of 1,056,000. Next, we have cash and cash equivalent. My cash and cash equivalent from my list of balances says 1,500,000 and 700. So I'm also going to look into my information to see what else affects my trade and my cash and cash equivalents. So keep in mind that in here I have my cash and cash equivalents of 1,500,000 and 700. They didn't separate it into bank and cash float and petty cash. They just said it's cash and cash equivalent. So I also need to put into effect anything else that is going to affect my bank account. Now look at information H. It says on 28 February 2024 MGM Ltd sold 20 laptops for cash. A trade discount of 10,000 was granted. The cost price was 19,000 each. The markup was 25% on cost on entry. This transaction is a cash transaction, so it's going to affect my cash and cash equivalent. So we start with the 19,000. This is the cost of each because I'm looking for a selling price. So I take 19,000, multiply with 125. How did I get it? This is 100% plus a markup of 25% all over 100, and it gives me 23,750 as my selling price. I sold 20 of this. That's why I take 23,750, multiply it by 20, and it gives me 475,000 as my total sales. Then I have to give a discount of 10,000 because they said there was a trade discount of how much? 10,000. So I minus 10,000 and my total sales now becomes 465,000. In this same channel, if you are not familiar with how we deal with your sales and cost of sales, and how do you get a sales amount when you've been given cost of sales, and how do you get sales when you've only been given the other, please, there is a video on sales in this very same channel. There's also an income statement video that deals with this specifically. Make sure you are comfortable with that calculation. So in my cash and cash equivalent, I start with that 1,500,700 that I got in my list of balances. Then I'm going to add this income of 465. I'm adding it because why? It's an income. It increases my bank, or it increases my cash. I have just and it's sales that I have made, and it gives me a total of 1,965,700. Then I move on to my equity and liabilities. Why? Because I'm unable to complete my upper part, but if I can complete this section, then it can give me things to balance with when I do my asset section. So let's start with my shareholders equity. Shareholders equity has ordinary share capital, which at the end of the year they only gave me a question mark, and I need the amount at the end of the year, as well as retained income. But retained income, remember, I calculated it and it gave me 2,840,000. So for my retained income, I already know my amount. I'm sorted. I don't need to do calculation. My only stress is the ordinary share capital. That ordinary share capital, I need to be able to calculate it. It's a question mark, so I'm going to go to my information to see what the heck they said about my ordinary share capital. When I get into my information, they haven't really said anything much about my ordinary share capital other than the number of shares at the end of the year, which on 29 February 2024 were 1,800,000 shares. Because of this, we are going to use my net asset value per share to figure out my shareholders equity, just like we did with net profit after tax. Remember how we dealt with that net profit after tax? We manipulated a formula to get it. So my net asset value per share is 650 cents. I'm going to use it in this formula. You see that formula is shareholders equity over number of shares all over 100. So I'm going to use the 650 in this case with the 1.8 shares to figure out my shareholders equity, which means my ordinary share capital will be a balancing figure. So look at my shareholders equity. I said that 1.8 million shares, which is the number of shares at the end of the year, multiply by 650 on top all over 100. This is the same thing we did with the earnings per share. We said 120 cents over 100. Now we are saying 650 cents over 100 because that is the net value, the net asset value per share. It gives me 11,700,000. This 11,700,000, if I now subtract my retained income from it, I will be able to get my ordinary share capital. So basically we are now saying my ordinary share capital becomes a balancing figure. We have the total and one of the amounts that fall under it. We take the two amounts, subtract each other. We have 11,700,000 of all shareholders equity minus the 2,840,000 of retained income, and it gives me 8,860,000 as my total for ordinary share capital. It is very important for you to be able to play with your formulae for your ratios because it will help you get your balancing figures. Let's move to non-current assets. Non-current assets, we always only have only one current non-current asset, at least at matric level, and that is our loan. We have loan from Superbank of 2,750,000. It used to be 3 million in the previous year. So what we are trying to do is to take the amount at the end, which is the 2,750,000, and minus the current portion of loan. So let's figure out our current portion of loan using information C. It says a fixed monthly installment of 50,000 to cover loan repayments and interest has to be paid over the full period of the loan. The repayment and interest for 2024 has been paid and recorded properly. Interest will decline over the life of the loan by 10% each year. So we are going to use this information to calculate the current portion of loan. So for my current portion of loan, they said I pay 50,000 per month. So I take the 50,000 rands, multiply it by 12 to get the annual amount, which is 600,000. Then with this 600,000, what I'm going to do, I'm going to take the amount that I owed at the end of last year, or the amount at the beginning of this year, which would be 3 million, and minus, open bracket, the amount at the end of this year, plus the amount of repayment, close bracket. This is a very important formula for you to keep in mind. Take the amount at the beginning of the year, minus, open bracket, the amount at the end of this year, plus the repayments in bracket. It gives me 350,000. This 350,000 is a minus because it shows that it's a payment of interest. This 350, by the way, it's an interest. Now they told me that my interest is going to decrease by 10%. So I'm going to reduce this 350 by 10%. How do I do that? Multiply it by 90%, or you can simply calculate the 10% of 350, which is going to be 35,000, and then take the 350 minus the 35,000. It will still give you 315,000. Then you take the amount of repayments and you minus the interest. Why do we minus the interest? Because the interest, we deal with it in the statement of comprehensive income. This is the statement of financial position. If we include it then it's going to be double accounting. Remember, they said in the 50,000, it's repayment plus the interest. They were telling you that so that you know to exclude or to subtract the interest. Why? Because the interest is dealt with in the statement of comprehensive income. That's where you record the interest, not in the statement of financial position. That's why we have to take it out. So basically, we are doing all of this to find the current portion of loan that excludes interest, meaning the payments for next year without the interest. Now, the payment is 50,000, so we could have easily said the payment for next year is going to be 600,000, but we have to remember in the 600,000 there is interest. So how do we exclude the interest? We calculate the interest. How do we calculate the interest? That's the calculation of last year's amount of 3 million minus open bracket this year's amount of 2,750,000 plus the repayment that has the interest and the repayment added together in them in bracket, and what you are going to be left with is the interest by itself. Now, if they didn't say anything about a decrease in interest, this would have been the amount of interest you would have subtracted from the 600. But they told us that this interest next year is going to decline by 10%. So you decline it by the 10%, which why we multiplied by 90 and it give me 315. So my current portion of loan at the end of the day is 285,000. So when I do my long-term loan in my answer book, I'm going to start with the amount that I owe this year, which is 2,750,000, and I'm going to minus my current portion of loan, which is 285,000 that I just calculated, and it gives me a loan of 2,465,000. Remember to always write your total for non-current liability. That same amount, you put it next to the line item of non-current liability. Remember, your current portion of loan that you subtracted will also now go to your current liabilities. So your current liabilities, start with the current portion of loan to make sure that you don't forget it. So you start with a current portion of loan. It's that same amount we just calculated, 285,000. You put it there as it is. And then next under my current liabilities will be my trade and other payables. So now I'm going back to my information to find items that fall under trade and other payables. My first one is creditors control. I see creditors control at 420,000. This is the amount that I'm going to start with. And then I'm also seeing that I also have an accrued expense of 9,600. Accrued expense, I'm saying these are the expenses I haven't paid. So that means I owe them and hence they are a payable. Then I'm also going to look at in my information, is there any other information that's going to fall under my trade and other payables? So in information D, I have rent. They say rent of 94,000 was received from a tenant for the period of 1 March 2023 to 30 April 2024. This has been recorded. The monthly rent has decreased by 800 from 1 December 2023. Now you're asking yourself, if it's a rent from a customer, wouldn't that be rent income? It is, except when the customer pays me in advance. It means they are putting me in a position where I now have to owe them. So let's calculate how much do I owe them. I owe them the rent for March and April, meaning 2 months rent. So I need to figure it out so that I can subtract it from the 94,000. How do I do that? I start with the amount that they said it decreased with. They said it decreased by 800. So 800 from 1 December. So I'm counting from 1 December to 1 December, January, February, March, April. He paid me up to April. So yes, up to April. So that's 5 months. So those 800 make 4,000. What do I do with that 4,000? I'm adding it back to the 94,000 to get a total of 98,000. This would be the rent I would have received if I had not decreased the rent with 800. Why am I doing this? I'm doing this so that I can easily divide the number of months by a simple 14 months. Remember, he paid me for 14 months. That's up to April. So I couldn't do this when 5 months had a decrease and the other months were paid in full. So that's why I had to add back the 4,000 so that it's a fully rounded amount. Then I can safely divide by 14. It gives me 7,000 rand. This 7,000 rand meaning is the amount they paid before I decreased. So now the last 2 months, that means that for those last 2 months, they include a decrease of 800. So simply I'm going to take the 7,000 minus 800 and it gives me 6.2. So meaning this is what they now paid after decrease. Now the March and April that I received are the months that happened after decrease. So that means for March and April he paid me 6,200 for each of them. That's why I'm saying 6,200 times 2. That gives me a total of 12,400. How do I know that March and April were already the months of a decrease? Because the decrease happened on 1 March December last year, which is 1 December 2023, and these ones are March. This is the March of 2024 and the April of 2024. So that means for rent I owe the 12,400. I also have the director's fee that I'm still owing. Do you know which one? The one in bullet number 2. Remember we said the first director we paid him for 12 months, the second director we only paid him for 11 months, whereas the third director we paid him for 14 months. The 14 months of the third director we dealt with in trade and other receivables, but there is the second director that we are still owing him for his last month. We owe him the 45,000 that we are supposed to pay him for his last month. How do I get 45,000? Remember, you start with the months in total of all of them. The first one was paid for 12 months, the second one 11 months, the third one 14 months. It gives me 37 months. I take my total amount of 1,665 divided by 37 to find out how much am I paying them per month. I am paying them 45,000 rands. So how much am I owing the second director? I'm only owing him for 1 month of February. How much do I pay per month? 45,000 rands. Hence, we dealt with that 45,000 rands. And then, remember in information G, there was a debtor with a credit balance of 9,000 that must be transferred to the creditor's ledger. We said we needed to take it out of debtor's control for it to now be added in creditor's control. So that means this 9,000, we are now doing that, adding it to the creditor's control. So that's why you are seeing in my trade and other receivables, I started with my 420 that I got from my list of balances. I add my accrued expense, it was 9,600. By the way, go back if you are forgetting this amount. And then I add back the rent of 12,400, then the 45,000 I owe to the second director, and then lastly I add that 9,000 I have transferred to creditor's ledger. Then lastly I am going to deal with my shareholders for dividends. Shareholders for dividend is also known as my final dividend. You see it there is 1,080,000. That amount, just as it is what becomes my shareholders for dividends. So my shareholders for dividends is 1,080,000. Shareholders for dividends, in other words, it just means final dividends. They are one and the same thing, hence I just transferred the same amount. The last line item I'm going to deal with under my current liabilities is going to be my SARS income tax, meaning I'm going to figure out how much I'm still owing SARS. So when I'm dealing with my SARS information, in information I, it says SARS income tax for the previous year indicates a credit balance amounted to 80,000. Then tax paid for 2024, meaning that this is the amount I have paid, is 628,000. However, how much do I owe, which is the income tax for the year? It has amounted to 648. So I gave them 628 when I was supposed to give them 648. So I'm going to start with my amount of 80,000, which was a credit balance from last year. This means that when last year ended, I owed them 80,000. I'm going to pay that 80,000 this year, as well as the amount that I was supposed to pay them this year, which was 648,000. Then I'm going to minus the amount that I have already paid them, which is the 628, and it means the only amount that I'm left with paying them is 100,000. The other way to get to this 100,000 is basically to say I was supposed to pay 648, I paid 628. The difference between those is 20,000 plus the 80,000 that I owed from last year. Together they give me a total figure of 100,000. However way you do it, so long as you end on the 100,000 that you're supposed to pay them this year. Lastly, I will enter my totals. My total equity and liabilities is 16,126. How did I get it? It's shareholders equity plus non-current liabilities plus the current liabilities. How did I get that current liabilities? It's everything that falls under current liabilities. Now, total equity and liabilities is supposed to be the same amount as my total asset. The current liabilities of 1,961,000, I'm going to use it to get my current assets using the information J's current ratio of 2.5 is to 1. So basically we are saying if you know the formula for current ratio, if I use that 1,961,000 that is current liabilities and I multiply it with this 2.5, I'm going to be able to get my current assets, the total for my current assets. So let me go back to my information and enter those two amounts. The first one being my current assets. My current assets, I took my current liabilities of 1,961,000 multiplied with the current ratio of 2.5 and it gives me 4,902,500. And then my total assets is going to be the exact same amount as my total equity and liabilities. It's 16,126,000. So I have put those two amounts there. Now that I have my total assets and my total current assets, I can use my current assets to find my inventory amount. How do I do that? I take my current assets minus my trade and other receivables and minus my cash and cash equivalents is going to give me my inventory amount. It's a balancing figure and that's how balancing figures work. So I get inventory of 1,880,000 and 800. Similarly, I can find my total for non-current assets if I take my total assets of 16,126,000 that I just got from my total equity and liabilities, and I now minus the current asset I had just calculated of 4,902,000. It will give me my current asset, my non-current assets at 11,223,500. And now that I have that non-current assets, I can use it to find my fixed assets. How do I do that? I take my 11,223,500 of non-current assets and I minus the fixed deposit of 1,200,000. That is going to give me the amount for fixed asset as a balancing figure, just the way I did with inventory. So you see there 11,223,500 minus 1.2 million, it gives me 10,023,500. And just like this, I have completed my statement of financial position and question 1 as well. Then moving on to question 2. In question 2 we are dealing with a topic of cash flow statements, which also includes financial indicators. So it says you are provided with the information relating to Tolani Limited, a public company, for the financial year ended 29 February 2024. In the required, you will see that in addition to it being a cash flow statement topic that includes financial statements, in 2.1 you see that you are now having to prepare an ordinary share capital note, which takes you back to the topic of notes to financial statement. I had already warned you about this, that in your cash flow statement question you may find such a question. So it wants you to prepare the ordinary share capital note to the statement of financial position. Remember, we're dealing with the different question now. It's not that previous question in question 1. So we have to find new information for this ordinary share capital note. But we start with the framework. The framework says authorized share capital. It wants to know how many shares are authorized. So you will put it in that blank space before ordinary shares. And then you are going to now enter your ordinary shares at the beginning of the year as well. So let's go to our information and find our ordinary shares and our shares at the beginning of the year. So in my extract in information C, it says ordinary share capital. I'm seeing last year's amount is 7,350,000. This is going to be my amount at the beginning, and the amount at the end is going to be the 6,835,000 that you see for 2023. Then I'm going to also look at information D to find my authorized shares. It says that the business has authorized shares of 600,000 shares, so the issue of authorized shares is resolved there. Then the second bullet says 70% of the shares were in issue on 1 March. So when we are looking for the number of shares at the beginning of the year, we will take the 600,000, simply multiply it by 70%, and it will give me the number of shares at the beginning of the year. Then the shares repurchased, it says 50,000 of the ordinary shares were repurchased from a dissatisfied shareholder on 1 August 2023. The company paid 37 rands. And then lastly, a further 10% of the unissued shares were issued. So this whole information is going to help me enter my amount. So I'm going to start with my ordinary shares. They said there were 700 of them. The amount at the beginning was 750 from my list of balances. Remember, it was 7,350,000, and the amount at the end would be the amount for this year, and that would be the 6,835,000. So I have just put basically what my information has already disposed to me before I can start doing any calculations of the amounts that are missing. My first calculation though is going to be the number of shares at the beginning of the year. They told me 70% of the ordinary shares were in issue at the beginning of the year. So authorized shares is 600,000. I multiply it by 70%, it gives me 420. So that will be the number of shares in issue at the beginning of the year. What's coming next is then that I have to enter the shares that I repurchased as well as the additional shares that I issued during the year. So for the repurchased shares, we know it's 50,000 from bullet 3. It says 50,000 ordinary shares were repurchased from dissatisfied shareholder on 1 August 2023, and a further 10% of the unissued shares were in issue. So the repurchased shares, I don't have to do much of a calculation. It's 50,000. What I have to worry about is the calculation for the 10% of the unissued shares. It's no longer 10% of the 600,000 now. Is a 10% of something else. So let's start first with entering my 50,000 shares. It has to be in bracket because I'm repurchasing. We have already talked about this. Anytime you repurchase, you have to enter that amount in brackets. We will come to the values in the end. Right now I'm worried about entering my number of shares. Then the additional shares issued, it's supposed to be 10% of unissued. So we started with 600,000 authorized shares. We issued 420. So my unissued shares become 180,000 of them. Then I calculate 10% now of 180 shares, which is going to give me the 18,000 shares. That's how I got that 18,000. So you make sure that you read your statements carefully. Then in the end, for me to be able to get my shares at the end of the year, I'm simply going to take the 420 minus the 50,000 and then add the 18,000. It's going to give me the number of shares that I issued at the end of the year, which is 388,000 that you are seeing there. So now that I have sorted out the issue of my shares, the issuing of my shares, I now need to worry about the figures now, the amount, the values of repurchased shares, starting with that. So I need to know the worth of the repurchased shares. That's what I record them with. So how do I find this worth? I'm going to simply take the value at the beginning of the year, which is 707,350,000, divided by its number of shares, which is 420. It gives me 17 rands 50. So I'm going to take that as the amount to calculate my repurchase shares with, because that's the value of my shares. So not the 37 rands, never use the 37 rands, because that's 37 rand is above the value of the shares itself. It's just what the customer charged me. So it gives me 875. It's in bracket because I paid that amount. Then I'm going to find my additional shares as a balancing figure. How did I do that? I start at the bottom, 6,835,000. Everything that is minus, I'm going to add, and everything that is positive, I subtract. So minus the amount in bracket plus the amount at the beginning, it gives me 360. So that completes my ordinary share capital note. Then I move on to question 2.2, which wants me to calculate the amount for cash flows statement and show working. 2.2.1 wants me to calculate dividend paid. By the way, all of these things that we are doing here, if you're wanting a different question and a different explanation, there are other videos on this very same channel where I go in detail over every single one of them. So we are looking at information C, and for dividends, it is showing me shareholders for dividends, meaning final dividends of last year, which is 280, and the final dividend of this year, which is 155. How do we calculate dividend paid? Dividend paid is last year's final and only this year's interim, never this year's final. So the 155, we don't use it. We are only interested in the 280. So the 280, which is last year's final, plus this year's interim. How do we find in this year's interim? We are looking at information E, bullet number 1. It says that interim dividend of 30 cents per share were declared and paid on 1 September 2023. So we know last year's dividend was 280. This year's interim is 30 cents on 1 September 2023. So we need to know the number of shares that we are going to calculate that 30 cents on, provided it's supposed to be on 1 September 2023. So basically, on our issued shares, we are looking at everything that took place up until the 1st of September. So the 70% happened on the 1st of March, which gave us the 420, and then the buyback happened on the 1st of March, so it must be included. So 420 minus the 50,000, I'm left with 370. So 370 is the number of shares that were in issue when we were issuing interim on the 1st of September. So again, to calculate my final dividend paid, I'm interested in last year's final. Why? Because this year's final I'm going to pay next year. So last year's final is 280. This year's interim is 370. The number of shares multiplied by a dividend of 30 cents, and it gives me 111,000. So to calculate this year's dividend paid, it's 280 of last year's final plus the interim this year, which is 111,000, and it gives me 391 rands 391,000 rands in bracket. Why? Because it's a cash outflow. Remember, we are doing the statement of cash flow, so it's important to indicate if it's an inflow or if it's an outflow. If it's dividend paid, it's going to be an outflow, so it should say so. A dividend outflow, you show that by showing in brackets. Again, just to reiterate, dividend paid this year, we are going to pay last year's final and this year's interim. Why? Because this year's final will be paid next year. Remember, at the end of the year, we only declare a final dividend. We don't pay it because the year is already over. We are going to take it out of next year's money, so it should reflect in that year. Hence, last year's final and this year's dividend. So we are done with our dividend paid. The second calculation they wanted in 2.2.2 wanted us to calculate income tax paid. Your final answer here should also be in bracket. Why? Because we are paying the amount and we want the amount that we paid this year. So there's those rules of you have to pay attention to the things that happened at the end of the year. So when you look at SARS income tax, we have a debit last year of 15,000. Debit last year means that this is a refund, but I didn't receive it last year. I'm going to receive it this year. Then a credit this year, meaning I owe them 74,000, but I'm not going to pay them this year. I'm going to pay it next year because the year is already over. So by the time we process that transaction, it will already be next year. Am I making sense? So you are also going to look at how much you also owe this year in terms of tax. We have net profit before tax and net profit after tax. I want the tax for the year. So what do? I take the net profit before, I minus the net profit after. It gives me tax for the year at 819,000. So those three amounts, the 15 that they owed me as a refund, the 74 that I owe this year, plus the 18 from this year, are going to be the three amounts that I use. So that's why I wrote them in detail so that you can see them proper. There's 15,000 from last year, which is a refund from last year. There's a 74,000 that I owe this year, but I can only pay it next year because of how transaction work. And the 819,000, which is income tax for this year. I'm trying to use all of these amounts to calculate the income tax that I would have paid this year. So I start with 15,000. It's a plus. It's going to be a positive amount, meaning it's an inflow because it's a refund from last year. Then the 74,000. This 74,000, I owe it to SARS, but I'm not going to pay it to SARS till next year. So it doesn't become a minus until next year happens. So in this year, I'm just going to leave it as a plus because it's not leaving my bank account just yet. And then I'm going to minus the amount that I'm supposed to subtract, because this 118 in my statement of comprehensive income, it's a minus. So I'm going to minus it, and it gives me income tax paid of 730 in bracket because it's a cash outflow. Then we also have in 2.3, we are looking at the statement of cash flow itself. Now, usually they will have you completing only sections of your statement of cash flows instead of the whole thing. Usually in the past, they would make students complete the whole thing, but with you guys, it's things are much easier now. And then in 2.4, they want you to look at the financial indicators, meaning you're going to calculate the financial indicators. That's what you can expect in question 3, to calculate some financial indicators, not all of them. Now, for the purpose of not making this video too long, I urge you to go to 2 videos that I have made on particularly those 2 sections. You will see there are different questions, but they basically follow the exact same format. You are going to find a video on cash flows that is going to do all of the sections of the cash flow statement. I also have a video that has sections of the cash flow as well as financial indicators in the cash flow. So make sure that you go see those videos, because in those videos we touch the framework, we also touch the formula for all of your financial indicators, how to use them, as well as how to comment on them if there's comment necessary. But in question 2, usually what you need to focus on is the calculation of those financial indicators, also be able to comment on them. The interpretation goes is more in detail in the last question, which is the topic of interpretation of financial statement, which we are going to see in the next chapter. But for the purposes of knowing your cash flow statement as well as your calculations for financial indicators, please go look at those 2 videos for you to be able to cover that ground. Then we move on to question 3. Your question 3 is now going to be that interpretation of financial statement that we are just talking about. So while in question 2 you are more focused on calculating the financial indicators, in question 3 you are more basically given the financial indicators and you are asked to comment on them. So look at question 3 on interpretation with South Ltd. It says you are provided with the information relating to South Ltd for the financial year ended 29 February 2024. South Ltd issued new shares to existing shareholders of 800 50 cents per share. That amount is very important for you to keep in mind. 3.1 says the directors are happy about the liquidity of the company. Quote 2 financial indicators with figures to support the statement. Now, in those videos that I was referring to you before, we talked about the areas of analysis, that when they say comment on the liquidity, which financial indicators are you looking at? If you want to know more about that, go back to those videos. But for now, for this video, you are going to look at the rate of stock turnover, which used to be 3 times, now it is 5 times. You're also going to look at a debtors collection period. It used to be 28 days, now it is 30 days. So those are my liquidity financial indicators that I'm going to indicate. Now, if they said liquidity and you code anything else that is not falling under liquidity, please know that no matter how accurate your interpretation is, you will not get that mark. So for example, if you choose the percentage gross profit, that is a profitability indicator. So it becomes very important for you to know what your liquidity indicators are. So when I'm commenting in 3.1, I'm talking about my debtors collection. I said it only increased, my debtors collection only increased by 2 days from 28 to 30 days, which is still within a month. Why am I saying that? When it comes to debtors collection, the aim of debtors collection is we want to be able to collect from our debtors within a month, meaning within 30 days. If my debtors collection period is above 30 days, I'm going to have problems, because remember, the way we do business is I need to collect from my debtors so that I can be able to pay my creditors. So if my debtors take more than a month to pay me, meaning if they took goods from me in January, they are not able to pay me before February ends, that becomes a problem. Then lastly, the rate of turnover improved by 2 times, from 3 times to 5 times, meaning the rate at which we restock. If we are only restocking 3 times, it means our stock is taking longer. But if we have to restock 5 times in 1 month, it tells you that 5 times we had sold out our stock and had to go stocking. That is a good thing, and that's why our directors would be happy. In 3.2, it says shareholders are satisfied with the issue price of new shares. Quote 2 financial indicators with figures to support the statement. Remember, at the beginning they told us we issued at 8.50 cents per share. So we issued new shares at 8.50 cents per share. So meaning, why are they happy with that 8.50? So we are looking at return financial indicators here. So we are going to look at my net asset value per share, which is 6.95 cents. So meaning that the value of my shares are actually 6.95, and I sold something that is worth 6.95 at 8.50. So you see why the shareholders are happy. The other thing is my market value per share. It's 810 this year. So they are worth 810 and I sold at 850. So basically I have gone above and beyond in both of those financial indicators. So I'm going to say new shares have been sold at 850 cents above the NAV, that is the net asset value of 6.95 cents. So meaning it's like saying I have a cell phone that is worth 1,000 rands and I sell it for 6,000 rands. Why wouldn't you be happy about the profit that you are making from such a thing? And then another thing is in the second bullet, new shares have been sold at 850 above the market value per share, which is 810. Again, it's a cell phone that in the market nobody would take it at less than 1,000, but somehow I was able to sell it at 6,000. So that becomes that is the same phenomenon here, and that's why the shareholders are happy at that price, because they are already in the company. So it means it is increasing the value of the shares for them. So again, not to have too much of an information overload, because this video is already long enough and I know there has been some strong calculations in it. Go back to the videos that talk about interpretation of financial statements. There is 2 of them. Again, go look at them using those thumbnails and you should be covered when it comes to this topic as well. To have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel. And if you have any questions, leave them in the comment section below.